Economics is at the heart of our concerns. Are banknotes and coins destined to disappear? Does a risk exist of not being able to recover funds deposited in a bank? Is Bitcoin a reliable asset? Is saved money kept inertly in a vault? Here is a selection of frequently asked questions concerning money, finance, and savings, and I'm going to answer them for you in this video. The act of paying for a common purchase, such as a coffee or a snack, with a credit debit card or a mobile device has become completely commonplace. It is a common practice, if you will. In the United States, the trend is clear. Digital and card payments dominate the use of cash, a phenomenon that has accelerated in recent years. Transactions made online are also increasing sharply, representing a growing share of the total transaction volume. It is undeniable that the use of cash is decreasing in favor of dematerialized payment solutions. This same trend is observed throughout the Western world. Despite this, citizens remain attached to physical currency. A majority of consumers believe it is important to retain the option of using cash. Furthermore, a significant quantity of physical currency is still circulating, representing billions of dollars in circulation. The Federal Reserve, Fed, and other authorities continue to oversee the production and security of cash to ensure its availability. Regarding central bank digital currencies, CBDCs, while Europe is actively working on a digital euro, the U.S. Federal Reserve is also exploring the idea of a digital dollar. This type of virtual currency, if launched, would likely offer privacy comparable to cash for small transactions and aim to be accessible to unbanked citizens. This potential digital dollar would be added to other means of payment, without intending to replace them. The most popular savings products in the United States include savings accounts, certificates of deposit, CDs, and money market accounts. Americans hold trillions of dollars in these various savings vehicles. Contrary to what one might believe, this money is not stored inertly at the bottom of a vault. Such a volume would require an immense safe. So, what happens to the money we save? The commercial bank puts it to work. The bank uses it in several distinct ways. One part is loaned to other customers in the form of credit, mortgages, auto loans, business loans. Another is invested in financial markets in low-risk instruments, and the remainder is held by the bank to constitute its required reserves and capital. The main role of financial institutions is to serve as intermediaries, making depositors' money available to the economy through credit. Savings funds thus contribute to financing large-scale national and local projects, real estate development, energy investments, and infrastructure projects. Savings are compensated through interest. This interest comes from the profits made by the bank through its lending and investment activities. In the United States, banks are subject to strict regulation by authorities such as the Federal Reserve, and they must adhere to strict criteria regarding capital and risk management. The price of one currency relative to another, for example, the rate of the euro against the US dollar, is called the exchange rate. This rate is subject to change daily. In the majority of large economies, US, Eurozone, Japan, no single authority fixes the exchange rate. It floats freely on the foreign exchange market, Forex. This is the largest financial market globally, with average daily transaction volumes estimated in the trillions of dollars. Multiple actors, central banks like the Fed, commercial banks, institutional investors, engage in purchases and sales. These exchanges are governed by the law of supply and demand. High demand for a currency, e.g. the dollar, causes its value to rise, while low demand causes it to fall. Some countries adopt a fixed exchange rate regime, pegged to another currency, or an intermediate regime with limited fluctuation. Saving is possible at any age. It is entirely legal to open accounts for minors, often in the form of custodial accounts, such as UGMA, UTMA. The minor will have full access to it upon reaching the legal age, usually 18 or 21 depending on the state, but they cannot open the account themselves. Only parents or legal guardians can do so. Exceptions exist for accounts like the Roth IRA for minors with earned income. Reliability depends on the definition given to the term. From a technological perspective, Bitcoin is highly secure. However, it is extremely volatile. Its value is subject to very strong and very rapid fluctuations. Bitcoin, the first cryptocurrency, launched in 2008, is a decentralized digital currency. It differs from national currencies, dollar, euro, which are issued by central banks and guaranteed by states. Decentralized currency is not regulated by a central authority. It relies on blockchain technology, a system for transmitting and storing information where all transactions are recorded and secured across a worldwide network of computers, ensuring a high level of security and transparency for the network itself. However, the instability of Bitcoin's value is significant, its price depending on a multitude of unpredictable factors. There is no government or banking guarantee like the FDIC that ensures the invested funds in Bitcoin. Furthermore, while the network is reputed to be very secure, the risk of hacking exchange platforms or digital wallets can never be totally excluded. Bitcoin carries significant risks that are crucial not to overlook. For purchase, it is essential to use platforms compliant with local regulations. While many popular sayings originate in the Middle Ages, this phrase is much more recent. It comes from the field of finance. It means that invested capital is constantly moving. Money is active, financing, investment, speculation. It also alludes to global financial centers being continuously open due to time zone differences. This is the iconic message conveyed by the character Gordon Gekko in the film Wall Street. Concerning deposits held in banks insured by the government, savings accounts, checking accounts, CDs, there is no risk for the majority of savers. The money is available and considered liquid. In the United States, the Federal Deposit Insurance Corporation, FDIC, insures deposits up to $250,000 per depositor and per insured institution. This guarantee ensures that even if a bank fails, savers will recover their funds up to the specified limit. Before money, barter was the method of exchange. However, the development of civilization, Neolithic, quickly revealed the limits of barter, particularly the difficulty in evaluating and exchanging vastly different goods, e.g., valuing a sheep in terms of a quantity of grain. It therefore became essential to find a way to easily evaluate the value of things, a universal instrument to facilitate exchanges, a means of payment. Before the appearance of metal currency, objects such as salt, shells, or stones served as monetary equivalents up to the era of King Croesus of Lydia, 6th century BC. He is considered the first to have minted metal coins, using gold and silver to certify their value. This legacy explains the continued use of expressions like rich as Croesus or hitting the jackpot.